All right, everybody, what's up? Good evening. I am Michael Edward, your head trader at True Trading Group. I hope everybody is well. With me today, we've got Jason Spatafora, aka the Wolf of Weed Street. Say what's up, Jason.
How's everybody doing tonight on this beautiful Tuesday?
All right, guys. Yeah, we've got a nice little stream here tonight that we're going to be going over. We got a nice little stream that we've got going on tonight. We're going to talk about the $1 billion question. And that is, has the stock market bottomed? That's what everybody wants to know. That's what everybody's talking about. And that is what we are going to address with you today. I'm also going to recap some of my trades today. Today was a non-event day for me. I made some money in SONN in the morning. I gave back some money. I tried to go after some SPY put options today. Didn't work out. Gave some money back. Was basically a non-event day. I've been trading very, very well lately. If you guys have been following the channel for a little while, about 2 weeks ago, I got my ass handed to me. 2 weeks ago, I really got hurt. Took a really big loss on some options. And ever since that day, I've not had a red day yet. And I've been trading pretty well. And today was a day where I went after a couple of trades, and I very quickly started to realize that the market was going to be choppy. There's a specific resistance level on the SPY that we're going to go over and we're going to talk about when we get into has the stock market bottomed. But I'm going to start this stream off like I do with every other stream, and that is I'm going to give people some time to log on, and I'm going to open up the floor to kind of some Q&A and let you guys ask a couple of questions to myself and Jason before we get things underway and we start to talk about what I think and what Jason thinks about has the stock market bottomed. So go ahead, guys. Feel free. Fire away. Ask us questions. We are at your disposal. So we'll answer a couple questions, maybe for about 20 minutes or so. Give some people some time to log on, and then we're gonna get down to business. Michael Mosca says, will Amazon keep going up? This move that Amazon has made is absolutely ridiculous. All-time highs for Amazon. Will Amazon keep going up? My answer is yes. I think Amazon continues to go higher, not right now. Okay, maybe the stock pulls back into 2,100 or so, but I think Amazon now anywhere above 2,000, I think is a great opportunity to get long. I added to Amazon. Okay, back in here is where I added to Amazon in my long-term portfolio. So I'm sitting up real nice on my long-term portfolio on Amazon. I do think that this company, the stock goes higher in the short term. In the long term, I think Amazon will someday rule the world. And I think in 5 years from now, we could be talking about the potential of people trying to break Amazon up. I think you're going to be starting to worry about monopoly type of situations with Amazon getting into various industries. With the pharmaceutical industry, they're in the food industry, obviously the shipping. Now they're into streaming services with Amazon Prime Video, and they're just going to continue to expand their network and their footprint on our daily lives. So I think that Amazon is a great long-term investment. It is one of my largest tech holdings.
Yeah, and let me just add for everybody. With everybody at home and everybody seeing the need of not leaving the house, this is what is driving Amazon the way that it is. I mean, not just the orders that are, going to be off the charts, but as brick and mortar businesses die, Amazon just thrives. Malls are basically shut down. You're going to see mall closures. There's going to be defaults. A bunch of retailers are going to go bankrupt after this. In which case, maybe they don't go bankrupt. Maybe they restructure and they go online and they pivot. In which case, Amazon, makes money hand over fist.
Yeah. I love it. I love Amazon long term. Oh, here we go. Everyone's okay. I knew these questions were coming. Everybody's asking about the airlines. So everybody is asking about the airlines with the airline buyout. I see there's like 15 or 20 of you that asked me the question about the airlines. So I still need to research the terms of the bailout. I just saw the news headline come out, guys, about the bailout. The government is getting warrants, I believe, in these companies as well. But to give you an honest answer, I really need to go and take a much bigger dive into the bailout package. I do think the airlines are good long-term ads. When you're looking at the jump that these stocks just made, it's really not that significant. Even with this news, you're talking about American Airlines still below $14. The stock was $30 before this. When you take a look at United Airlines, sitting at $30, that stock was a $90 stock before this. So, I mean, United, I think, I like United better than I actually like American, but I have not added to my long-term portfolio on these airlines yet. But this news with the bailout, and now that there's actual terms that are out there, I've got to look into it a little bit further. Jason, I don't know if you had a chance to see the bailout and what your take is on it, if you have anything to add. But to give,
yeah, look, I'm glad that the government got warrants. They should have gotten an equity stake, kind of like the 2008, 2009 bailout of the auto industry. U.S. took 63% of GM. I mean, look, I've added actually to my long-term holdings in American. I'm still looking at Southwest and JetBlue, which I like. I hate Spirit Airlines. I hope they go under because you can't recline their seats. But look, I look at like 2 weeks ago, I had put options on American Airlines, and I just rolled that profit right into American Airlines stock. And that's one of the strategies that I'm using now is from like options trades. I'm taking like 30%, sometimes 50, depending, and rolling it into companies that I like. And it's been a lot of American, a lot of other companies that I think are going to be a double in a year or two, especially if they give a dividend. So while I don't think that they're out of the woods, and they could go lower, who knows? With the markets just kind of ripping the way it is, people could just start buying.
Yeah.
If there's a big short tomorrow, or there was a big short overnight, we'll see what happens. But
yeah, I think, guys, I mean, I like I mean, a lot of you are asking me like, what's my take on airlines? I like the airlines. Okay. I just think it's going to take them some time to recover to pre-corona levels. I think that the airlines and the cruise lines as well, it's going to take them time to get back. You have to think of this way, like 9/11, which was a much different scenario, but 9/11, the airlines took a real big hit because nobody wanted to fly. Everybody was scared to fly after 9/11, and air traffic dropped off dramatically. It took the airlines almost 3 years to get back to air traffic that it saw pre 9/11. Now, I'm not saying it's going to take 3 years for people to forget about the coronavirus and get over the fear of getting into a metal tube sitting 5 inches away from somebody else after we come off of this pandemic. I'm not saying it's going to take 3 years, but it's certainly not going to take 3 weeks. So I think that you will see other sectors of the economy recover at a much, much quicker rate. if you take a look at what the airlines have done to this point, and then you take a look at what companies like Walmart, Pepsi, Home Depot, Johnson and Johnson, Apple, Amazon, AMD, when you take a look at what those companies have done, Chipotle, when you take a look at what those companies have done, what those stocks have done, that's what I mean by those sectors and those areas of the economy are going to recover a lot quicker. People are going to be a lot more likely to go buy an iPhone. They're going to be a lot more likely um, to hail an Uber than they are going to be to get on a plane. So, and especially even less likely to get on a cruise ship. But eventually, people will forget about coronavirus, just like they forgot about Ebola. They forgot about MERS. They forgot about SARS. They forgot about H1N1 swine flu. They forgot about smallpox. They forgot about Spanish flu. They forgot about polio. They forgot about all of these things. There will be a vaccine. People will eventually forget about coronavirus, and people will start going on flights. They'll start going on cruise lines. I just think that it will take them some time. So my long-term investment strategy throughout this entire process has been adding to companies that I like, that I loved 3 months ago, that I just thought were expensive, that have really good balance sheets, that maybe pay nice dividends, and staying away from companies that are going to struggle to get back on their feet. Even with the bailout is fantastic. Everyone knew a bailout was coming. The government was not going to let the airline industry go out of business. Everybody knew that. Now that the details are out of the way, how long does it take the airlines to get back to their regular traffic production? Eventually, the economy will open back up, people will start flying, but the airlines and the cruise lines, in my opinion, will be some of the last sectors to recover, even after I think restaurants and movie theaters like AMC has gotten destroyed. Live Nation has gotten destroyed. Concerts, okay, and sporting events and all of those things. I think you're going to see other sectors of the economy recover first. So, although I do like United Airlines, I like American Airlines, those are the big two. You also have Delta to round out the big three. I'd like them for long term plays. I just think that there's no rush. And now that the bailout's out of the way, now you can look and say, okay, now maybe there's a floor in on these stocks. I can go ahead and start to add to my positions long term and then start to make a move. What I'm going to do is when we're done with this live stream later tonight, I'm going to take a look at the bailout and decide if I think that, okay, maybe bottoms in, and I'm going to go ahead, I'm going to start to buy these airlines, or if I'm going to wait a little bit. Okay, I've already added to a lot of my long-term holdings. I gave you guys in previous live streams a long list of companies that I've added to. I can cover that again in this live stream if you guys would like, but that's my take on the airlines. I know that was kind of a long-winded answer, but a lot of you were asking me these questions. I saw like 30 of you ask me this question already in the chat, so I wanted to make sure that I answered it for you all. Let's see. Next question. Hey, how are you, buddy? How are you doing? I'm doing good. Thank you. Yug, thank you. Yug says wants to know how I'm doing. I appreciate that. Thank you. Um, let's see. Oh my God, my thoughts on Tesla. My thoughts on Tesla. Um, Tesla is expensive, in my opinion. I'm not a buyer of Tesla up here, guys. Although I do love Tesla, I like Tesla for a long-term play, but I think it's very expensive up here. I do. I think it's expensive. I'd much rather be a buyer in the 500s. Um, I'm not buying Tesla up here. I don't own Tesla in my long-term portfolio. I would like to, but not at these levels. Kyle wants to know, where can a guy find a TTG hat or hoodie? Kyle, it's funny you said that because I actually had hats and hoodies made right before this coronavirus stuff happened, and I don't want to. We're not shipping things out to people during the coronavirus stuff, but TTG hats and hoodies will be coming soon. Don't worry. Yeah, guys, let me hear because a lot of you are asking. I'm going to type in the chat right now a list of companies that I have already added to in my long term portfolio. Now, I have been adding over the last couple weeks. Okay. I've been adding over the last couple weeks in my long term portfolio, but I'm going to show you guys, I'm going to type the names of the stocks in chat to show you guys what are the stocks that I've already added to. Okay. I've already added to these names. Okay. I have already added to all of those names, and I've done so over the last couple weeks. I started buying in like the middle of March, is when I first started investing. Well, not investing. I've been investing for the last 10 years, but um, when I started buying and adding to my long-term portfolio during this sell-off, I started adding a couple weeks ago. Yes, Andrew, right now is a great time to invest in the stock market. Yes. Let's see. Next question, Jason. If you see anything that you wanna grab in the questions, you can also jump.
I saw a question about, I think his name was Donald. He was talking about manufacturing, and Trump saying that he wants to bring manufacturing back to the United States.
Right.
Look, it doesn't matter what your politics are. That's never going to happen. Made in America, unfortunately, is ended after World War II, when we were the only game in town and we had 27% GDP. And the reason being that manufacturing isn't going to come back is because the machine of capitalism for the United States exists based off of cheap labor, and we're never going to be able to compete with other countries, especially developing countries that have an endless supply of slave labor, and that's essentially what it is. If you look at the Apple factories in China, I mean, they make nothing. They have nets outside the window to catch people because they're jumping out windows. And nobody wants to pay $5,000 for an iPhone. So, if you look at and I'll give you a little, cannabis manufacturing thing to make you sound smart at a party. Cannabis jobs are outpacing all manufacturing jobs in the United States. So there's more jobs in cannabis, and there should be in the next year, than all of manufacturing together. So the idea of manufacturing coming back to the United States it's just kind of like, unicorn parts. You're better off chasing rainbows and looking for a pot of gold.
Interesting take.
I mean, you're allowed to disagree with me.
I know. I do. I disagree slightly with certain things. I'm just responding to somebody's question right now in chat. Give me 1 second.
I just in chat, I just put a bunch of long-term things that I've been buying.
Yeah. Okay, so a lot of people are asking me about Oxy. A lot of people are asking about Oxy. Well, just to touch upon Jason's comment or Jason's view, and where him and I disagree. Obviously, yes, I don't think that we'll be able to ever completely get away from, manufacturing in developing nations because of the cheap labor, and that's just the reality. Is that you don't really have many people in the United States that are willing to work for $2 or $3, and unfortunately, there are those situations in developing nations. So that's just the reality of the world. It sucks, but when you're talking about reality, that's the truth of it. But I do think that manufacturing can start to come back to the United States, not in a sense where it'd be pre-World War II type of situation, but I think that one of the things that will stick in people's minds after this coronavirus is the lack of equipment and how strongly we rely on other countries to make things that we need. And um, I think that it will be a big sticking point for Donald Trump if he does get reelected. I think one of the things that he's going to try to do in his second term, obviously, is to get a phase two trade deal with China. But also, I think he's going to try to bring even more manufacturing jobs back to the United States, which we've already seen an increase in manufacturing business because that was one of the things he wanted to do. But I don't think we're ever going to get to a point where you would be able to say, okay, we no longer need India, we no longer need China, we no longer need Taiwan. But I do think that we can see that sector get a little bit of a boost. And I think you can start to see manufacturing data in the United States go on the upswing once the economy, gets turned back around. So I do think that there is some potential growth in that sector, industrials and manufacturing. I actually do think um, that there's a lot of promise there. When you also think about if we're going to have low interest rates like this, close to near zero interest rates like this for the foreseeable future, you've already heard Donald Trump talk about an infrastructure spending bill where he wants to spend, $2 trillion on infrastructure development while the money is still cheap. Something like that going into effect, if the government does decide to spend that money while interest rates are very low, that is something else that could help the industrials and that sector as well. So I think that is where you could start to see some improvement and some faster growth in that sector than maybe what we've seen over the last 10 years. And I think maybe a phase two trade deal with China can also just further that process along. So that's just some food for thought. Um,
Let me add to that because you brought up a really good point. Now, when I'm talking about manufacturing, I'm talking basically consumer goods, right?
right.
We do need to bring back certain things that are manufactured to the United States. Obviously, in the medical field, right now, 80% of all drugs are manufactured overseas. Okay, IV bags, okay,
Yep.
which nobody talks about, which
Yep.
you need,
Yep.
are manufactured. The bulk of them, they're still in, kind of in the United States, but they're in Puerto Rico, which is a place where, like the biggest manufacturer of IV bags is in Puerto Rico, a country, or not a country, whatever it is, a territory or, a pseudo state that has tons of issues. Yeah, we do need to bring, there's going to be niche opportunities in manufacturing. But when I'm talking about manufacturing, I'm talking about like individual jobs, like, going, punching a clock and like making something. The only way that that changes is if, we develop something ourselves technologically. If like one day we're manufacturing like robots, you know, but we're just not there yet. And right now, it's just consumer based.
Yeah. Yeah, good point. So moving on, Jason, a lot of people are asking us about Oxy, OXY, and oil. Um, guys, I like Oxy. I don't think Oxy is going to fail. I think it's got some really strong backers. You got Carl Icahn owns like 10% of the company. Warren Buffett's involved there as well. I don't think the company goes out of business. So I actually like Oxy. We just need oil to recover. And oil's not going to recover until demand goes back up. And demand's not going to go back up until the economy opens. And the economy is not going to open until the coronavirus is under control. Now, seems like the virus is getting under control. It seems like we see the light at the end of the tunnel. The curve is flattening on the spread, but you saw OPEC cut production by 10 million barrels. It did nothing. It did nothing. Oil sold back off. Oil bounced up to like 26 or so, leading up to that, and then back to 21. Oxy went all the way up towards 18. Now it's back to 15. I do think Oxy is a good buy above $10. And I do think that eventually you'll see Oxy back around 25 or $30. But, do I think Oxy gets back to 65 or 70? No. No, I don't. But do I think Oxy can get back to 30, 35? Yes, I think it can. But that's only going to happen once oil recovers. Forget about production cuts. They already cut 10 million. You're not going to see another 15 million barrel cut. Okay. You're going to see oil's going to sit here until either there's another big cut, which I don't think there will be. I think you might actually see people start to actually kind of renege on the cuts, and some people may not keep that cut for as long as they said they were going to. I think there's a possibility of that happening. But until demand for oil goes back up, and how does demand for oil go back up? Construction sites turn back on, airplanes start flying again, cruise lines start sailing again, people start driving again, commuting to work. That's how consumption and demand for oil rises. Right now, there is no need for oil. The airlines don't need it, the cruise lines don't need it, the average American doesn't need it to fill the gas tank in their car. Until that changes, demand for oil is going to be very low, and that will keep the price of oil very low because supply has outpaced demand. There's too much oil in the market, not enough demands to buy it. So you have oil just sitting, just literally just sitting in containers with nowhere to go. Until that changes, I don't expect any of these oil companies to recover. The oil companies will recover as the economy opens and as demand for oil increases. One oil company that I like, okay, I do like Oxy, but you want to talk about a lot safer, is Chevron. I love Chevron. CVX. Chevron has a tremendous balance sheet. Tremendous balance sheet. And they give a kick-ass dividend also. So I would rather see you guys invest in Chevron, pick up a real nice, sexy dividend. If your upside on the equity is going to be capped, you got to understand, guys. If you're buying an oil company, it's not because you think it's the next Apple. Okay, oil is becoming less and less and less popular. Like if you're a believer in Tesla, then you can't be a believer in the oil services industry. Now, I'm not saying that oil is going to disappear in the next 5 years. That's not going to happen. You're going to need oil for the next few decades. Okay. But when you talk about potential upside, it's like, are you going to buy Oxy and think that Oxy is going to go from 15? And do you think it's going to go, back up to, 85 where it was in 2018? And it's been dead money for the last 4 or 5 years. This thing's been dead money for the last, if you invested in Oxy at $75, you haven't made $1 in 4 years. So to think that Oxy is going to go back to 80s or 90s, I think you're dreaming. But you can buy a stock like AMD, that's a semiconductor, that is my favorite holding that I own. I love this company. Okay. And I just bought more in here. I'm so happy with that ad in my long-term portfolio. But this is a stock that in 5 years, I think could be $200. So when you want to talk about potential upside, I'd rather see you guys look for growth in better sectors and maybe start to look to pick up dividends in oil sector companies. And Chevron's got a real sexy one. So something to think about, food for thought.
With Oxy, it's kind of like in that basket of like airlines, right? I think it will double. Energy isn't going to go anywhere. And like Mike said, to get off of oil would take 30 years. And even then, you're not talking about getting off oil completely because it's literally in every product that, like from the computer that we're on to the clothes that we're wearing, oil is part of that, the manufacturing of that product,
Yeah.
So it's one of those that you can add here and there. I think like with Oxy, it's just kind of better to play the option right now.
Yeah.
All right. So And since I'm here, so it's about marijuana. You guys want to hear about marijuana?
Yeah, I think they always want to hear the Wolf's take on the marijuana sector.
Let's get right to it. Aurora just had a reverse split. 1 to 12 reverse split. They have right now 1.3 billion shares. That's going to take them down to like 100 and just over 100 million shares. For the people that are surprised that Aurora is doing a reverse split, you should get your head examined. These are the same people that rode this thing down from $10, and are now scratching their heads as to why. Look, the thing about reverse splits are they're never good. They had to do this for two reasons. One, they needed to stay on the New York Stock Exchange. That way they keep that liquidity coming in. And then also because they're running out of money. They're pretty much out of money. So they're going to dilute more. And that's the reason that they're doing a reverse. New York Stock Exchange, one thing, but really they need money. And the only way they're going to be able to do that is if they're able to dilute the hell out of the stock. So I don't see why anybody is buying Aurora. The only way as soon as this thing reverses, I'm just going to buy put options. As soon as the option's available, because it'll probably take a couple days, I'm just going to load puts. I think that it'll be a really easy short. And that's really just my thoughts on Aurora. Now, for the other companies in the sector, Afria, I think, has earnings tomorrow. I would probably expect maybe a little bit of a pop because they're very good at accounting over there at Afria. But it's not a hold. I don't think you hold anything from now until the summer. I think everything's a trade. That's every single pot stock. And if you're investing in pot stocks, you don't want to be invested in Canada. There's just too much. They overspent on everything. There's dispensaries aren't opening up at a quick enough rate. The whole upside for that whole sector in Canada was Europe opening up. Europe's not opening up anytime soon. So there's a couple of companies. If I had to pick one, gun to my head, it would probably be Kronos. And the only reason I would buy Kronos is because they've got the most cash to outlast anybody. Now in the United States, I've said this before, and I'm sure some of you have seen my Twitter. I really like TrueLeaf, and I really like Curaleaf, and I really like Green Thumb Industries. But I am in no rush to own any of them. I won't own Green Thumb because I'm not buying anything now. I'll start buying in July and August when everything's getting hammered because it's going to happen. And I won't touch TrueLeaf, even though I think it'll be the biggest and best company in North America, because May 15th, a month from now, they've got their first share unlocked for 11.5 million shares. And their volume is absolutely atrocious right now. So right now, they have about 30 million shares out there. They're adding 11. So, that's another 25%. Or a third. They're gonna increase the float by a third, and then in July they've got 55 million shares coming out. I've never seen an unlock in the cannabis space that's gone well.
Me neither.
And the only one that I have somewhat seen gone well was T-God, and that being, everybody got out in September at the top, and they knew the unlock was coming, and they were just waiting for the thing to get hammered, and people were sitting there with just monster bids. So it dropped 50%, and then it rocketed up 100%. And it ended up closing green on the week and just going up. So, and now if you look at T-God, their management just completely screwed the pooch. And I'm still holding some, private placement bags. So yeah, I mean, my quick take on T-God, because I just saw it pop up, is I'll be a buyer when they get rid of Brian Atide and all that management. When I was looking at maybe adding in last September and finally getting back in, and this is before Aurora sold off the shares, I had a quantitative analyst go through everything and be like, okay, well, what's the value of this thing? Like bare bones, like just selling everything off. And he's like, it's $1. And I got like spreadsheets and charts and everything. But, even now, I won't touch T-God. You don't want to be in Canada. And I said that in October of 2018. If some of you guys follow me and like I tweeted a calendar like 45 days in advance of what was going to happen in the sector. And it literally every day that I said was going to be red ended up being red. And with that, I said the catalysts are gone in Canada. It's all going to be about the United States. And a lot of people that are in this market right now have never ridden a bear market in the cannabis industry. Everybody got in, for the most part, got in 2016, 2017, where every dip got bought, and they thought that they were just geniuses. And these same people rode it down into, 80% losses, when they were up tons of money. But I do see the cannabis sector bouncing and picking back up, come September, October. And I'll probably be a buyer in August while there's still a lot of blood in the streets and fatigue.
Yeah. I know, guys, I'm the same. Jason and I agree wholeheartedly on this topic. I don't own any of these stocks. I still do own a piece of T-God actually, but I took part in T-God in the pre-IPO investment round, but I still own some of that. But aside from that, I don't own any of these stocks. I don't want to be in Canada. I want to be in the U.S. But it's just still too early. It's just too early in the U.S. market. And when it comes to if you're saying, hey, I got to buy something right now, then I think Jason's spot on with Kronos, because you have to look at cash. The biggest problem with a lot of these companies is they burned through such a ridiculous amount of cash that it is embarrassing, if you ask me. I think you have some of the most grossly mismanaged companies and financials in the entire publicly traded domain, I think took place in some of the marijuana companies. And when you look at a company like Aurora that has no cash left, it's mind boggling that they could have been that irresponsible with their money spent. So when you look at that, just that reason alone, if you've got to buy one of them, Kronos is in a good cash position compared to others. Aurora has the reverse split, and trust me, guys, that stock is going back down after they do that reverse split, because Jason's right. They're going to need to raise money. They're going to dilute. They're going to do an offering, and the stock's going to go back down. So you got to look at companies that have the cash to withstand the slowdown. But I'm waiting for the U.S. markets to kind of come online. Let's see. Next.
And Kronos, you pick the next question. I'll just say something quick about Kronos. Kronos' whole market cap right now is its cash. 80% of its market cap is its cash position.
There you go.
Yeah. And it's trading at basically a 1-to-1 multiple, where if you look at Tilray, it's a 7-to-1 right now. So
nice.
There you go.
Nice. Somebody asks, am I doing the YouTube live streams just until the end of April? Am I continuing them afterwards? No, I'm continuing them afterwards. But what is stopping at the end of April? I'll just take a quick second just to let you guys know, and then I'll keep taking a couple more questions. But this reminds me, during coronavirus, we've been doing 30% off, okay, for TTG. That offer is expiring after April 30th. Okay. So for the month of March and the month of April, we ran a 30% discount where you guys can join TTG for a 1 year all-inclusive membership, get all the courses included for free for a 30% discount. After April, that discount is no more. Okay. It was our way of kind of giving back to the community. Well, people were getting furloughed, they were getting laid off, small businesses were suffering. We wanted to help people during that time. So we did a 30% discount and we kept that live for the last 2 months. After April, that discount will be no more. We're going to go back to our regular price. So if you guys have been considering joining the THD family, you do not have much time left to get the 30% discount. And I really would hate to see you guys say 3 weeks from now, you're like, hey, you know what? I decided I'm going to pull the trigger. I want to join the team. And the coupon code is no longer active. Because if you guys are here now on this live stream and you guys are part of the channel, I want you guys to get the discount. If you're spending the time to join me and Jason on these live streams, I don't want you guys to pay full price. But that discount code, which is in the description of this video, it's TTGBM2020. That will give you 30% off. Okay. The 1 year all-inclusive membership includes all of the courses for free. That's the beginner and foundation courses, the advanced courses, the option courses, the trader psychology courses, how to thrive during a stock market crash courses, as well as all future courses that come out down the road. Okay, I'm constantly coming out with new courses. Like I'm working on an advanced options course now, which I'll share with the YouTube community. I'll share with you guys some pieces of it. But I'm working on an advanced options course, which includes straddles, strangles, iron condors, butterflies, credit spreads, selling options for income. We're going to talk about all of that stuff in the advanced options course. I'm working on that. And as a member, you automatically get access to all of these new features. There's no upsells. So it's not like I come out with a new course and you're like, oh, $300. No. When you're a member, you're a member. That's it. You get access to everything. So you get all the courses. You get a year of chat where I share my screen. I'm on the microphone talking to you guys with what I'm doing and what I'm seeing. You also get the text message trade alerts for a year, so you can follow along with what it is that we're trading, even if you can't be in chat. And you also get the email swing trade alerts. So whenever we enter a swing trade, I send out a push notification in chat, a text message, and an email. The email breaks down the thesis on the trade. What's my intended hold time? What's my profit targets? What's my stop loss? Okay, all of that stuff gets broken down in the email on the swing trade. Okay, so all of that stuff, guys, is included. You also get the stock profile section. You get our analyst report section, which is a little section on our website. You can type in any ticker that you want, and it populates for you a stock profile, and it gathers all of the analyst ratings for that particular stock with their buy ratings, sell ratings, price targets, and it compiles it into one report for you. That's just another feature that's available for True Trading Group members. All right. So again, guys, take advantage of the 30% discount while it's still active, because after April, it will be no more. All right. So again, that's TTG BM 2020. All right. And if any of you guys are here for the Wolf, Jason Spatafora himself, he's got a code TTG Wolf. And you can also make sure to click on his name at checkout to let us know that you guys came to TTG specifically for the Wolf.
Also give a one-on-one, which I think is worth the whole price of entry, because I go through your pot stocks and just slice and dice.
Yeah, guys. Jason also, for those of you that joined, Jason's doing a one-on-one session with you guys. So Built in Binary has a question. BLT in Binary wants to know, why do I sell a course if I make billions of dollars trading? Well, Built in Binary, I don't make billions. I make a lot, but I don't make billions. And the reason why I have courses is very, very simple. And I'm going to answer this question for all of you because I have had a lot of people message me, I'd say probably over the last 2 years, that has said to me, Mike, if you're such a good trader, then why do you bother with the chat room? And my answer is very simple. I'm going to tell you guys a quick little story. I had friends of mine and a family friend that was asking me about advice for trading. long story short, they came to me and they at a family event and they started talking to me about, oh well, what about this? What about this? What about this fish hook? What about this washout long? What about this? And he started saying all these crazy things to me. What about this 1 minute pullback? What about this? And I'm like, what the hell are you talking about? And I started to realize that this guy had spent thousands of dollars buying educational courses and didn't learn a single thing. He was like $3,500 later, had not a single clue what he was doing. He got taught all of these wrong things. He got taught gimmicks. He did not get an education. He spent thousands of dollars and did not get an education. And I started to look around and notice that the large majority of services out there that teach people how to trade are complete BS. They take advantage of your desire to try to learn this skill, and they sell you a lifestyle and say, if you listen to me, you can have this car. You listen to me, you can have this house. But then once you sign up, they don't actually teach you how to get that house or how to get that car. And that really, really bothered me, because you have innocent people that are spending their hard-earned money to try to learn something. When somebody has the desire and the motivation to learn something, to learn a new skill, that's not something that you take advantage of. That's something that you help. And this goes all the way back to when I worked at the hedge fund. If I had not gotten the mentorship that I got when I worked at the hedge fund, meaning my boss, who was my senior portfolio manager, is responsible for the trader that I am today. Had it not been for this man, I would not be the trader that I am today. Period. I didn't become the trader I am today just because I just figured it out all on my own. I was taught. I sat in a classroom for 3 months of my employment at the hedge fund before they let me touch a dollar of their money, and I learned classroom style setting. And then after that educational program, I had a mentor that I can ask questions, bounce trade ideas off of. When I struggled, he was there to help me. When my emotions got out of control, he was there to keep me in check. If it was not for him, I don't know where I would be today, because my hedge fund went out of business in 2009 after the big stock market crash and the Great Recession. 50% of all hedge funds went out of business. Mine was one of them. And had I not had the skill set that I acquired working at the fund, I would not have been able to live. I knew how to trade, so I just kept trading. I thought I was going to be able to get another job at a hedge fund. It wasn't that simple. 50% of all funds went out of business. But I knew how to trade, and I traded for myself, and I started making money for myself. And then I started taking that money and I started investing it in other businesses. And that has allowed me today to enjoy the life that I live today, and now also have multiple income streams from other businesses that I have invested into over the years. But none of that would be possible if it wasn't for the money that I made trading. And that wouldn't be possible if it wasn't for my mentor. So when you ask me, Mike, how important is it, or do you really understand the importance of a mentor? I understand it better than anyone. And if someone is going to give me that title, I take that shit seriously. So when people ask me, Mike, well, if you make billions, you know what? One of our you know what? I'm going to read you guys a text message, because I just got a text message. I just got a text message from one of our members the other day. Here it is. He's one of our original members. Okay, one of our original. And here, I'll cover the name just to show you guys that I'm actually reading a real message. Okay. But I want to show you guys, this is why I do it. This is why I have True Trading Group. This is why I do what I do. And also, guys, trading is a lonely ass job. It's a lot more fun when you do it with a group. Plain and simple. But here's what I want to read to you guys. This member, he's one of our original members. He was one of my first one-on-one mentor students. He's one of my original students that I mentored. And he just made $70,000 last month in the month of March, by the way. He's been with me for about 2.5 years. So he sends me a message. He's showing me a trade that he made on SPY options. Him and I made a very similar trade the other day. And I said, wow, left my ass off. Nice trading, bro. He goes, bro, I learned from the best. You did for me what that guy, your hedge fund, did for you. You honestly changed my life. I said, that's music to my ears. Thank you. I really appreciate that. I commend you for taking the next step. You put in the work and now reap the rewards. Now you get bigger and better. His response, thousands of hours of screen time, but I would not have been able to do it without what you showed me. This shit wouldn't have happened. I'm slowly scaling up my risk per trade over the last couple years, always working on my game. You changed my life. Thank you. That is why I do what I do. So BLT binary, to answer your question, why do I bother selling courses if I make billions of dollars trading? That is the answer why. It is that simple. And that's why I always preface with telling people that, guys, TTG is not for everybody. I do not want people that don't take it seriously. If you're looking for a quick way to make money, you're looking to get rich quick, you don't want to put in any work, you don't want to do any studying, you just want me to just tell you what to do, I don't want you. TTG is a very tight knit group. And Jason and I spend the time to do one-on-one mentoring, one-on-one lessons. I hook up a lot of our members to TraderView. TraderView is a great platform that connects to your brokerage account, that puts the statistics on your trading into a detailed report. I go over those detailed reports with our members to identify weaknesses and strengths and problems and where we need to work on their trading. If I'm going to spend the time to be the mentor that my mentor was to me, if I'm going to spend the time to be that for you, you better spend the time to put in the work. And that's why I say TG is not for everybody. We don't advertise all over the place. You guys are never scrolling on the internet and you come across me like this, showing you my car, my house, and telling you you can become a millionaire. We're a very tight knit group. Okay. This is something that I take very serious. And if you guys want to learn, it's my honor to be your mentor. And I want you to know that I take it very, very seriously. So if you guys are interested in all of that, use the coupon code because it is over at the end of April, TTGBM 2020, and that'll get you guys the 30% discount on that 1 year all-inclusive membership. Okay. So I hope that answers your question. Guys, I see that there has been a million questions that I need to catch up with. There's a million questions I have to catch up with. You guys were firing questions away while I was talking, and I couldn't even keep up with them. But let me scroll up a little bit and see if I could. Joe Kobos asks, how can you trade with the group if you have to work during the day? It looks like you have to be present online during 9 to 4 market hours. No. So, Joe, that's not true. The majority of our members are actually part-time traders. The majority of our members are part-time traders. Okay. We have a lot of traders that trade a couple hours a day. We have a lot of traders that trade a couple days a week. And even if you can't be in chat during the day, that's why we have the text message alerts. So whenever I enter or exit a trade, you get sent a text message in real time straight to your cell phone. So you can be sitting in your cubicle on a conference call and you get a trade alert. You can log in right there on your cell phone and place the trade to follow along with what it is that I'm trading. So that's why even if you're not in chat, you can still follow along with what we're trading via the text message alerts. And I'm not a scalper, so my trades don't last seconds. I'm not in and out in 30 seconds. My trades last several minutes to several hours, sometimes several days. Okay. I'm more of a traditional day trader / swing trader that trades options, small caps, mid caps, large caps, ETFs, futures. I'm not a scalper. I'm not a trader that's in and out 100 times throughout the day. My trades last a while. So it is very possible for you to follow along with what it is that I'm trading throughout the day. So, Joe, I hope that answers your question. Let's see. Begin AL Champ says, The charts that he saw this morning in the chat room was the Charles Schwab platform. I use TD. Can you show charting basics using TOS at some point, perhaps? Of course. So, begin AL champ. That was Jason Simmons' screen. You were seeing Jason Simmons uses Charles Schwab. That was what you were seeing today in chat. My charting software is TC2000. My trading software is Lightspeed. Jason charts and trades with Charles Schwab. Jason Simmons, at least. Jason's about a 4. I think, Jason, yours E-Trade, right?
Use both, but mainly E-Trade for options.
Yeah. So in our courses, the Beginner Foundations course, it does help you set everything up. But if you become a member and you want to learn how to set up your Thinkorswim platform, it's no problem. Jason, we also have Chris Toner as another moderator in chat. He uses Thinkorswim, and any one of us will walk you through setting up your charting platform. So once you become a member, you just send us a message in chat or you send us an email, say, hey, I just joined. I'm brand new at this. Can you guys help me set up my charts? No problem. We'll get you on the phone with one of our moderators and they'll walk you through setting up your chart platform. Janet Young, I appreciate you tuning in as well. Thank you. I appreciate that. Let's see. Next question. Man, there's a lot of questions, guys. I try to get to as many of these questions as I possibly can. If I don't get to any of your questions, guys, please just comment after the live stream is over because it loads up on YouTube. Just comment in the comment section.
Gold traffic.
Let's see. No, Raul, you don't need a bigger account to day trade. That's just you're under the PDT rule. Guys, quick little tidbit here. This is a little piece of advice. You didn't hear it from me though. Wink wink. Oh God, no, it's not monthly. Oh God. Somebody Converse Dry. No, it's not $1,000 monthly. It's $1,000 for the whole year. No, it's $1,000 for the whole year. Did we just freeze? Did everything just freeze? You know, guys, you guys don't need to have 25,000 in your account to day trade. It just means that you won't be under PDT rule. Okay. Pattern day trading rule is the worst rule I think that's ever been implemented. It's supposed to protect the little guy. It actually hurts the little guy. It allows you can only make 3 day trades in a rolling 5-day period. So what I recommend traders do is, let's say you have 12 grand in an account, 10 grand. Let's say you have 10 grand in an account. You're held under PDT rule. You can only make 3 trades in a 5-day period. Take that 10 grand, break it up, put 5 grand with TD Ameritrade, put 5 grand with E-Trade. There you go. Now instead of 3 trades, you've got 6. All right. No, Mo, it's not stupid, Mo. Mo says it's stupid to invest long-term portfolio with margin if you're short on cash. It's not stupid. You just have to make sure that you're able to satisfy a margin call. Because if those long-term holdings go against you, like let's say you were long, let's say you got long your long-term portfolio in January or February on margin, you would have got a margin call. And if you don't have the cash to satisfy that margin call, you're going to get liquidated. No, it's not three trades on the same stock. It's 3 trades in general, S-piece. The pattern day trading rule is 3 trades in general. But yeah, Converse, it's not $1,000 a month. It's $1,000 for the year. Okay. Yeah, guys, I mean, there's a lot of people that are asking questions. There's a lot of people that are asking questions about the chat room and everything. If you guys have any specific questions, but I see a lot of you guys are answering it anyway. Hey guys, that $1,000 a year, it comes out to like $2.80 a day, something like that. It's a cup of coffee. It's a cup of coffee. Honestly, it's a cup of coffee, guys.
Going to Starbucks right now.
Yeah, Jason's going to start. Oh man, all the Starbucks by me are closed, bro. All the Starbucks by me are closed.
Nobody's going to Starbucks, so you can afford it.
I know. All the Starbucks by me are closed, man. It's like all I want is a vanilla sweet cream cold brew. It's all I want, and I can't have it. Oh man. So let's see. Next questions. Next questions. I do make videos on trading options. Somebody says I should make videos about trading options. I do make videos about trading options. We have an entire options trading course, and I have an entire options section on the YouTube channel. And I trade literally every one of my like 5 of my last 6 videos on the YouTube channel were about trading options. What am I watching tomorrow at the Open, Al? I don't know. I think markets pull back tomorrow. I think this 284, 285 area holds as resistance. I think we maybe just pull back a little bit. I don't think it's going to be a big sell off. I don't think it's going to be an aggressive pullback. I think it's going to be a slow little fade. I think it could be a tradable fade. I think you might see some profit taking on a lot of these names that have run really far after those March lows. I think you can see a little bit of profit taking, a little bit of portfolio rebalancing that could give us a little bit of a pullback. There is more room to the upside. So that's why I don't have any open positions, because we could also in the same breath push and test the 50-day moving average. The 50-day moving average sits right there on the SPY, and that would take you up to 289, 290. Could we get up there? Yeah, we definitely could. Okay, and that's why I don't have any puts that are on me now. I don't have any open put positions, because I'm not fighting the Fed on this bounce. And this is a Fed stimulus bounce that had gasoline poured onto it when we got confirmed the curve flattening in New York. So that's what this bounce was. This bounce right here was Fed stimulus. This continuation was a flattening of the curve in New York and in the US, and also in many countries in Europe. The spread starting to slow and that curve starting to flatten. That's these two moves that you guys got here. Now our next catalyst is going to be what? Earnings. Earnings are going to be bad, but everybody knows they're going to be bad. So we've got to, it's kind of a funky area up here. I'd be very uncomfortable being long the SPY at this point in time. I'd be very uncomfortable getting long up here. I think that the path of least resistance is a pullback back down towards 265, more so than a push up to 300. So I think there's a much greater chance that we see 265 than there is a chance we see 300. Let's see. Oh God, Matt, no, I have not tracked my profits on a percentage basis. So Matt says, over the period you've been getting stock recommendations, or oh wait, are you talking to me or somebody else? I don't know if you're talking to me or if you're talking to somebody else, but as far as do I track my percentage on a percentage gain basis, I don't track an average percentage gain basis, because I maintain a balance in my trading account. So I have about 350 grand in my trading account, and then I get margin on that. So I've got, well over 7 figures of buying power that I trade with throughout the day. But what I'll do is, like, I started the month with 350 and I finished the month with 420, I just take that balance out and I go back to 350. So it's not like I have a rolling tally of, I start with X amount of dollars and at the end of the year I have X amount of dollars. So I take that money as income. I take it, I put some to the side for taxes, I invest some long term, and then I pay my bills with the rest and I live my life. So I don't, I haven't tracked like the percentage gain on my trades, but my accuracy is around 70 to 73%, and that's pretty consistent. So when I'm on fire, I'm more, closer to 75, 76. When I'm struggling, I'll be closer to 70, but on average, it's like 70 to 73% accuracy. Next question. Okay, let's talk about it. Global Travel said, "Did I have any sort of experience when I got hired at the hedge fund?" I didn't have any experience. I got hired fresh out of college, but I had a finance degree, a finance major with a lot of economics understudy. Um, and I applied to probably 20 different hedge funds, and I only got offered the job at one of them. And that is where my story began. No, I don't think the TVIX, um, uh, you know, I think Max Fear is out of the markets, and the TVIX is going to be a very, very, very difficult trade here on out. Okay. So next question. Next question is going to be. Let's just get into it, Jason. We've been on here for over an hour already, so let's talk about what we think about the markets, guys. We're going to start talking about the $1 billion question, which is, has the stock market bottomed? And I'm going to start to tell you guys a little bit about what I think is going to happen here in the foreseeable future with this market. And Jason will give you his input as well. Jason, you want to go first? Or you want me to go?
Age before beauty, right?
In that case, go ahead.
Look, it's if we were trading in a vacuum, all right, and coronavirus was just, everything was just kind of going, and we didn't have Fed intervention, the market would look a lot different. 3 different times the Fed had to come back with stimulus, on top of lowering interest rates, on top of going to 0% interest rates. So, it's really tough to fight the Fed. And, this is something that we've been looking at in TTG over the last week or so. Buying put options it's been a struggle. The easy money seems to be gone right now. But, it's going to be choppy, all right? We cannot go straight up. I think that once we get earnings from some of these companies, and they don't even give guidance for the rest of the year, we're going to get a little bit of a reality check. Does that mean that the market's just going to drop down to new lows? No. I don't think the new lows are going to happen because the Fed will not allow it to happen. You had all these banks yesterday coming in, JP Morgan, Goldman Sachs saying, oh, bottom's in, bottom's in. It's going to be really choppy. And I know what Mike's going to say, and I'm going to let him pose the question of where you think, the economy is based off of this price, where it was the last time we were here.
Exactly.
Right? And if anything's improving. Look at it. We've got 16 million people unemployed. That number is going to go up. One of the things that I'm looking at is real estate, and the inverse of real estate. You've got defaults going up by 4%. I just saw today. You've got people asking for forbearance. It went up 78% this month. So the market is kind of a fiat market, in my opinion. All right. I'm not going to get into the whole philosophical idea of, is it valued accurately? Because no, I don't think it's valued accurately. I don't think that the SPY should be pushing this. I don't think it should have been a V-shaped recovery. I think it should have been a U-shaped recovery. So, is this the bottom? Yeah, look, I'd probably say we're probably pretty close, but I won't make a judgment on that until we have some earnings and I see what the reaction is to the market. Because if earnings are really bad and the market pulls back and then quickly bounces, then yeah, I'm going to say it's the bottom because, they're not going to allow us to go below 250 on the spot. And that's just kind of like my view right now. You know, don't fight the Fed.
Yeah. Yeah. And listen, guys, Jason and I, we have similar thoughts. We have similar thoughts in that my I was always in the camp that the markets were going to retest the lows. After we put in the low around 220 on the SPY, I was in the camp that we were going to pull back and retest those lows. Everything changed when the Fed stepped in. You guys, I'm going to give you guys a little bit of an economics lesson, a little bit of a global macro kind of lesson, because we're going to talk about, you know, what the Fed actually did and how that affects equity markets. when the shit started hitting the fan and economies were closing and people started to realize that businesses were going to go out, we're going to go under, it becomes a credit issue. Whenever there's issues in the fundamentals, the underlying foundation of an economy, it usually shows its cracks in the credit markets. The credit markets is what signaled 2008. And that is when, if you have problems in the credit markets, that is when a health crisis, which is the coronavirus, can turn into a financial crisis with systemic risk. During the entire pullback, in the beginning, the first 2 weeks, everyone, you heard the term systemic risk. You heard that term a lot. Systemic risk means there's an underlying problem in the economy that reaches everyone. It's like the oceans with every boat in the ocean. When the oceans rise or fall, the ships are going to rise and fall with it. That's what systemic risk means. You have systemic risk and you have isolated risk. Isolated risk is like Boeing. When Boeing had the 737 MAX issues, that was an isolated risk specifically to that company and that company alone. When Chipotle had the salmonella outbreak, that was isolated risk that was specific to that company. The housing crisis in 2008 was systemic across the entire financial industry that was stuck holding worthless subprime mortgages. That is systemic risk. What happened with the coronavirus was the health shock. The solution to the stopping the spread of the virus was to shut economies. That becomes a major issue if companies are not generating revenue, because now the credit ratings on these companies start to plummet. A credit rating means a company has a specific ability to meet their debt obligations and to satisfy their liabilities on their balance sheets. Meaning, I'd like to lend you money because I'm confident you can pay me back. In simple terms, when you start to have businesses that don't generate revenue, they stop paying their mortgages, they stop paying their rent, they stop meeting their debt liabilities, their credit ratings start to suffer. What starts to happen is the institutions that hold debt in these companies, they like holding this debt because it provides them with an interest rate, provides them with yield. And you have companies that will, institutions that will say, oh, a company like, no, Apple is not borrowing money. Apple has enough money. I'm just using them as an example. Oh, Apple, you want $1 billion? No problem. I'll lend it to you all day long because I know Apple can pay me back. But all of a sudden, when the company can no longer start to pay back that debt, the institution no longer wants it. They try to sell that debt off. Then the credit rating on the company starts to drop because they no longer can as easily meet their debt obligations. This is where systemic risk can come into play. You hear the term junk bonds. You might say, what the hell is that? What is a junk bond? A junk bond is a high risk debt vehicle. So it's like, I'll give you an example. If a friend of yours owned 15 sandwich shops or 15 pizzerias in your state, all doing very, very well, and they came to you and said, hey, Mike, can I borrow 100 grand? I'd say, sure, no problem. You've got great cash flow. Give me 5% interest. Okay. And then you had someone come up to you and said, hey, Mike, I want to open a store that sells the little toy wind up chattering teeth. It's an idea that I have. Can I borrow 100 grand? And I said, sure, here's 100 grand to borrow to open up a business with your shattering teeth. You know, those little toys that you wind up. Bad example, but you guys get the point. Okay. That person would be an example of a junk bond. Now, if I'm going to give that person 100 grand, I'm going to charge a lot more than 5%. I'm going to charge him 15% because there's a much greater chance of him not being able to pay me back. That is a junk bond. Junk bonds have high yields because they're higher risk, meaning higher interest rates. So when you have all of this debt that starts to become junk debt, there was not a buyer for it. What the Federal Reserve did is the Federal Reserve stepped in and said, anybody that wants to drop their debt, we'll buy it. In 2008, what happened was you had everybody, the housing boom was out of control. In 2008, you had people go and take out mortgages on houses they couldn't afford. Everybody wanted to take out a mortgage. Everybody wanted to buy a house because real estate only goes up, right? Wrong. And banks and mortgage companies and lenders, they wanted to get in on the action. So they actually lowered their lending standards. They were less strict. So if you made 50 grand a year, they were giving you a mortgage for $500,000. That shouldn't be. Okay? But that's what was happening in 2007, 2006. Then in 2007, 2008, the housing market burst. And what you were left with was institutions that lent people money using the house as collateral, but the house was no longer worth the money that they gave the lender, the lendee. So now you have these institutions that are holding these mortgages that are not worth, or they're holding the mortgage on houses that are not worth the money that they're owed. Now, as the consumer, if you just bought a house for 500 grand, or you have a mortgage for 500 grand, but your house is only now worth 350, those people stopped paying the mortgage. They said, well, shit, go ahead, take the house. It's not worth the money that you say I owe you. So you have all these institutions that have all this bad debt, and now they're stuck with it. And they use that debt to get leverage to buy other debt, and so on and so on and so on. And it was a domino effect. And in 2008, the Fed acted too slow. 2008 was going to be a disaster no matter what, but it didn't have to be as bad as it was. 2008 was the world is ending. Literally, you're going to wake up one day, you're going to go to the ATM, and nothing's going to come out. That was 2008. That was very, very real. That was a very real possibility. But it didn't happen. That is what could have happened if the Federal Reserve did not step in. Because the Federal Reserve came in and said, okay, anybody that has this junk debt, we're going to buy it. And they took $2 trillion and said, I'm going to buy it. I'll buy it. You're selling it. I'll buy it. You're selling it. I'll buy it. And that settled the credit markets. The credit markets will dictate equity markets. When people are scared that companies can no longer meet their debt obligations in the credit markets, equities start to sell off because equities are seen as higher risk investments. So institutions will liquidate equities if they think the companies are not solvent enough to pay their debts. So the Federal Reserve stepped in and said, we're going to buy all that debt to settle the credit markets. That made all the difference. That move by the Fed is unprecedented. It's historic. It's never been done to the extent in which it was done the other week. That changed everything. Once that news came out, that's when I started to say to myself, okay, the bottom might be in, because I think the Federal Reserve just put a bottom in. They just gave the stock market a floor, because now you know that there's not going to be a credit issue because the Fed is going to buy whatever bad debt people want to get rid of. So if companies can't meet their debt obligations, and an institution is holding it, no problem. The institution can sell that debt to the Fed and they'll buy it. That settled credit markets, and in turn settled equity markets. That is why, and for that reason alone, is why I think the bottom is in. Now, do I think we just go straight back to 330? Absolutely not. What I think happens over the next several months to several quarters, I think we have 2 or 3 quarters of range-bound trading. I think you see the markets trade in this range for the foreseeable future. I think we stay below the 200-day moving average, and I think we stay above your 2018 previous pivot low. And I think this is your new range. Okay, I think this is going to be your new range. So we're going to bounce around in here while we go through earnings. Some companies, every company's earnings are bad. Some are worse than others. Some aren't as bad as others. Some give guidance. Some don't give guidance. Some parts of the country are back open. Some states are still closed. Well, some companies operate in one state. Some companies operate in 50 states. You know, all of that I think is going to chop the market around. And that's why I think over the next couple quarters, you're going to have really good buying opportunities for your long-term portfolio. And what you should be doing right now is what I've been doing, is identifying high dividend paying stocks that can give me income while markets trade sideways. You're not going to get the markets. We're just going to go right back to 330. That's not going to happen. Okay. That's not going to happen. But I do think that we have a range and a choppy trade in the markets over the next couple of quarters. But I am now in the camp that March low at 218.26, I am now starting to think that that is the low. And it's only because the Federal Reserve, what they have done, and more importantly, the Federal Reserve has specifically said, and we're not done. Meaning, if we need to do more, we will. To me, that gives the stock market a floor. So when you guys ask me, do I think the bottom is in? Because of that reason, my answer is yes. Does anybody have any questions about what I just explained? I know that was a lot. I was talking a lot of economics there, credit markets. I mean, some people may not have understood all of that information, but I tried to break it down as much as I can. Try to break it down as much as I can for you guys. Well, Darren, I mean, first you can just check what their dividends are. You just check their dividends, guys. You just check their dividends. Okay. I mean, the companies, it's public information what their dividend yield is. So, anything that's like 5% is a great dividend yield. A company that gives you like a 1.5% dividend is not much, but 5, 6, 7% dividends, which some companies even do, are great dividend yields. Andrew says, I studied the options course in TTG and I don't think I understand time decay and premium loss. Will my Apple 265 puts that expire Friday go back up if Apple drops like crazy by then? Yes, they will go back up. Andrew, they will go back up if Apple drops like crazy by then. But you have to understand how options work. Options are made up of two things, intrinsic value and extrinsic value. Intrinsic value is how far into the money your option is, meaning if it's a call option, how far above your strike price is the stock trading? If it's a put option, how far below the strike price is the stock trading? That's intrinsic value. When an option contract expires, an option is only worth its intrinsic value, nothing more. Okay. Extrinsic value is also called time value. Okay, that's how volatile is the stock, how much time is left until the option expires. That's time value. The closer that you get to your expiration, time value decays to zero. So eventually the option will only be worth whatever it's in the money. So let's say you buy a 265 put option in Apple that expires on Friday. You will only have intrinsic value if come Friday that stock is below 265. If it's at 265.50, your option will expire worthless. It'll be worth zero because at the end of expiration, it's only worth its intrinsic value. Time value will always decay to zero. Exactly. Al Ben, that's why I like Chevron, 6% dividend yield. That's why I like Chevron. Gorby says, what range did I say we're going to chop around? I think we chop around I think our ceiling is around 300, which is a 200-day moving average. And I think our bottom is somewhere probably around the 230s or 240s. I think we chop around. I mean, that's a big range, but I think you're going to have big range movements in the SPY over the next 2 to 3 quarters. Let's see, what other questions do we have here? Max Miami wants to know, would I buy Boeing? I already did buy Boeing. I own Boeing from much higher prices. I own Boeing from much higher prices, but I also added to Boeing at 106. JT Lynch, what are you confused about? I literally just gave you a long, detailed explanation of why I think the bottom is in. I'm not sure what you're confused about. Yeah, and a lot changed since last week, JT Lynch. That I literally just explained what has changed. I mean, I like McDonald's a lot better than Wendy's. I mean, if you're asking as a stock, I like McDonald's better than Wendy's. I thought about that, Kelly. I thought about this. It's extended now. It could have been a bear flag. I think a week ago, but I think now we've broken out of that potential bear flag. Yes, Moscone, I think we see a rebound in oil, but only after the economy opens back up. The production cuts aren't going to cut it. As we've seen, oil has still pulled back in, but I think oil will rebound back to the 30s, 40s. once the economy opens back up and planes are flying, cruise ships are sailing, and people are driving their cars, construction machines are being turned on, you're going to see demand for oil increase. I like Gilead, Chris. So Chris said, what about any of the vaccine making companies like Gilead or Roche? I like Gilead. I like Gilead. Yes, I do, Kareem. Kareem, I do. I do think we pull back towards 265 over the next couple of months. I do. Yeah, I traded SONN this morning, guys. My trade lasted. I don't know. My trade lasted. Let me see. Actually, let me pull it up. Just tell you guys how long my trade lasted for. Trade lasted about an hour from entry to last exit. Lasted about an hour. Well, that's a different story, TG. TG says, I don't feel comfortable with saying the market's bottomed. We should be expecting another wave of coronavirus affecting the economy. That's different. So, TG, that I agree with you. If for some reason the economy opens back up and we have another massive spread and an outbreak and we have to close the economy again, that's a totally different story. Then I think markets make new lows. We're in serious trouble if that happens. Um, I don't know if we'll close the economy, to be honest with you. I don't know if governors and at the federal level, at the White House level, I don't think they'll close the economies again if it happens. We just won't be able to take it. The economy won't be able to handle it. But in that case, TG, yes, I would agree with you. If that happens, then no. I think the bottom is not in. But I'm hopeful that that does not happen. We have therapeutics that we can use to treat the virus, and then eventually we have a vaccine, and we can all go about our merry lives. All right, guys. Let's see. Next questions. Yeah, I've got bad hat hair right now, guys. Sorry. Airlines. JT Lynch asked about the airlines. I mean, we talked about the airlines a little earlier if you were just tuning in, but I think with the airlines, I know we just got the news about the bailout. I have not had a chance to go through the terms of the bailout. So when I'm done with this live stream, I'm actually going to dig in a little bit. I like United Airlines, maybe best out of the big three, which is American, Delta, United. It's going to take them a little bit more time to recover, but I do like the airlines guys as longer term investments. I do. Dane, you never know until the day of. Dane says, what are some good small caps to watch with a low float? You never know until the stock comes out with a press release because they're all crap. They're all garbage companies. The stocks trade terribly until they come out with a press release that gets everybody excited, and that you'll see that the day they come out with the press release. There's really no way to tell any of these stocks that come out of nowhere. They're garbage companies, guys. Like SONN is a garbage company. Santosh Kumar, excellent question. Do you think the trade war will intensify after this pandemic? Excellent question. And it can go two ways. It can go one of two ways, honestly, because what I think happens is I think Trump is going to use this at the negotiating table. It has been confirmed. Yeah, it's leverage. It has been confirmed by the Intelligence Committee of the United States and also of Great Britain, I believe, also confirmed it. China lied. Everybody knew it, but it's actually confirmed and documented that China lied about the virus. If they were truthful about the severity of the virus and how easily it spreads, other countries could have taken precautions a lot sooner and a lot more severe that could have prevented the situation we are in today. I think Donald Trump is going to use that as serious leverage against China when it comes time to negotiate phase two. Because he's going to say, listen, guys, either myself and the rest of the allied world are going to come down with sanctions against you for lying about this pandemic, or you can cave on this topic of phase two. China's going to fight it. China's going to deny it like they deny everything. But it's the truth. And I think it could actually work to the U.S. advantage because I think it will actually help us get to a phase two deal faster. And I think it would be a more meaningful deal. Phase one was great. Phase one was nothing to laugh at. But there's a lot more work to still be done with a trade deal. And having this leverage against China, because in this case, it's not just the U.S. It's not just the U.S. putting tariffs on China. This would be a coordinated effort by the allied world, the United Nations, to punish China for lying about the pandemic and killing hundreds of thousands of people. And shutting down world economies. So I think that could work in our favor to get a phase two trade deal. And I think a phase two trade deal is very important for where does the stock market go in 2021, 2022. Because if the economy comes back online, a strong phase two deal could jolt this economy right back. Phase one was great too. Phase one was going to add, a nice chunk of GDP growth before this coronavirus situation. A strong phase two deal, that could be what could bring us back to all-time highs. A vaccine for the coronavirus and a phase two deal, that could potentially take us back to all-time highs. Well, no, Big Bala, Big Bala says I'm joining TTG as soon as Mike comes back down to Miami for the one-on-one mentorship. Big baller. Um, I do mentorships over the phone. I don't do what I mean. We have members from all over the world. We have members in from all over the country. We have members in Canada. We have members in Italy. We have members in Australia. We have members in Singapore. We have members from all over the world. I do one-on-ones with all of them. Um, but it doesn't have to be an in-person meeting. So I schedule all of my one-on-ones through virtual sessions, and we review trades and we go over everything and we talk one-on-one with specific things that the traders can work on. So you don't have to wait for me to come back to Miami because God knows when that will be once this this quarantine is over. Hopefully it's within the next month. I can get myself back down to Miami. I would love to get back down there. I got to check on my place too. My place, my car, everything. I haven't been down there in so long. Um, so I'm dying to get down there, but you don't have to wait for me to get to Miami to join TDG because we do our one-on-ones virtually. JR Gutierrez, I've been wearing baseball caps my whole life. I have played baseball my entire life. Since I was 3 years old, I have played baseball. I was actually an All American center fielder. Fun fact about Michael Edward.
I was a college All American in lacrosse.
Yes, and the Wolf was an All American lacrosse player. I was All American baseball player. He was an All American lacrosse player. I'm right-handed. To my father's demise, Andrew. My father was left-handed, but I'm right-handed. No, I'm not a Marlins. I'm a Yankees fan. I'm a Yankees fan all day. Yep, guys, I'll be in Miami as soon as this is over with. I'm coming back to Miami as soon as this is over with. Oh, West Kendall, nice. I'm right. I'm in Brickell, guys. I live in Brickell. Um, Converse, honestly, his moves are not that big. You know, it's like when Warren Buffett sells, $200 million of stock, it's really not that much for him. He took his holdings in Delta Airlines from like 10% ownership of the company down to like 8.5% ownership in the company. It's like, it's not. I think Warren Buffett is scheming something big. I think you're going to see Warren Buffett give Boeing a fat check. I've been saying it for weeks, and I don't have any reason to. I don't have no inside information. I just think that you're going to see because Boeing needs money. If the government wants an equity stake in Boeing to bail them out, Boeing doesn't want to take it. If the government wants an equity stake, the government should have an equity stake. If the American taxpayer is bailing them out, then the American taxpayer should get paid back on that money through an equity stake in the company. But the Boeing CEO already said if the government wants an equity stake, they're not going to take it. They said we have other funding options. Okay, well then go get your other funding options. But who could that possibly be? Because Boeing, it's not like they need $10 million. Boeing needs probably 30, 40 billion. Well, before this happened, Warren Buffett was sitting on like $128 billion in cash. So I think you can see Mr. Buffett come flying in with a 30 or $40 billion check to Boeing and say, just give me, 8% interest and give me warrants at, $90 or whatever ridiculous price that he gets warrants at. And that's it. And he'll do exactly what he did with Goldman Sachs. And I think he did it with, was it Citigroup? I forgot who. It was Goldman Sachs, I think. It was somebody else too in 2008. He gave Goldman like $10 billion with an 8% interest rate and warrants, and he made a killing, made an absolute killing. He did it with a handful of companies in 2008, 2009. And I think he'll do the same. I think he'll do the same now. Later, Smiley. I'll see you tomorrow, brother. I'll see you in chat. Yeah, Milos, if that happens, Boeing price will go up. Yes. If a company's earnings are worse than expected, what is the best tactic to trading that company the day after? I mean, there's not a specific tactic. I mean, it all depends. Okay, their earnings are worse than expected, but what was their guidance like? Was their guidance did they raise their guidance? Did they lower their guidance? There's a lot more than just they beat earnings, yes or no. Um, there's a lot more to it than that. So that's too general of a question for me to answer. I'm sorry. Okay, guys, I can't believe how fast time flies when we're doing these live streams. It's crazy. I can't believe how fast time flies. It's nuts. I want to remind you guys because we're now almost 2 hours in. I want to remind you guys about the 30% discount. Okay, I want to remind you guys about the 30% discount because it expires the end of April. If you guys want to join TTG, get a 1 year all inclusive membership. It includes all of the TTG curriculum and courses. Guys, the courses on the site are the same courses and the same material that I learned when I worked at the hedge fund. The 3 months of education that I went through at the hedge fund, I've simplified that material and created the courses online. You are getting a true professional education when you join True Trading Group. It is an education that you can take and apply across multiple trading strategies, multiple asset classes. You don't have to trade exactly the way that I do because it's not a gimmick. It's a true education. You can apply it to your own strategy and trade your own things. Okay. Use the coupon code TTGBM2020, and that'll knock off a 30% discount on our 1 year all inclusive membership that includes all of our courses and immediate access to all future courses. Like I said, I'm working on an advanced options course. I'm working on a swing trading course that will be out in the very near future. When you become a member, you automatically get access to new courses. There are no upsells. You don't join and then I come out with a new course and you got to pay $300 for the new course. You immediately get access to every single piece of content available at True Trading Group. Okay. You get 1 year of chat room where you see my screen, you hear me on the microphone breaking down my analysis. You get all my trade alerts in real time. You get the text message alerts. So if you can't be in chat during the day, you can follow along with what it is that I'm trading via your cell phone because whenever I enter and exit trades, a text message gets sent to your phone in real time. You also get 1 year of the email swing trade alerts. Whenever I enter a swing trade, you get an email sent to your inbox with the whole thesis, breakdown, intended hold time, profit target, stop loss, the whole nine. Okay. In addition, you get the stock reports and the analyst, the stock profile and the analyst reports. That's a section on the TTG website where you can type in a ticker symbol that you're interested in. If you're interested in Roku, you can type in Roku and it populates for free, included in your membership, a stock profile, all their financial information, their earnings data, when they report earnings, if there's any dividends, when the dividends issued, all of that stuff, press releases, news, insider buying, insider selling, and also analyst reports. If there's 20 different analysts that cover Roku, you get a compiled report that shows you how many of them have a buy rating, how many have a hold, how many have a sell, what are their price targets, etc. All of that is included in your membership for less than a cup of coffee a day. With the 30% discount while coronavirus situation is going on, you can get a 1 year membership to True Trading Group for $1,000. That is less than a cup of coffee a day. After April, that 30% discount will be no more. We will go back up to our regular full price after April. So if you guys are on the fence and you're interested in joining, you want to get professional education, which I assume you do by being part of this live stream, I am challenging you now to take the necessary steps to get a professional education, dedicate the time and energy needed to learn this skill. Because if you are serious about learning, I am serious about teaching and mentoring you, as is Jason. Anybody that signs up here specifically for the Wolf, don't forget, he's got his own code, which is TTG Wolf, and he will be doing a one-on-one with you guys if you guys sign up tonight. Okay, so for those of you that sign up for Jason tonight, we'll get a free one-on-one. Yep, Antonio, you can still come in on Tuesday if you want. You can still come in on Tuesday. All right, so again, guys, use coupon code TTGBM2020. You can click on the links that are in chat, or you can also click on the link in the description of this video below. Hey guys, we take PayPal also. So if you guys don't want to pay with credit card, we also do take PayPal. Nice, Converse. I look forward to trading with you, bro. Converse is joining up. I look forward to trading with you. Don't forget to use the coupon code. Do not forget to use the coupon code. All right, I don't want you paying the full price. TTG BM 2020. That gets you the 30% discount. Oh God, most money I've lost six figures in a single day, Caitlin. Caitlin wants to know how much money have I lost in a single. What's the most I've lost in a single day? It's six figures.
90 grand by not pulling a bid and putting down mulch.
Oh my God, Jason, that's some expensive mulch. Oh my God, that's some expensive mulch. Oh God. Oh my God. So yeah, guys, sometimes, the markets get you, but it doesn't happen often. I say one of my strengths as a trader is really my risk management. Honestly, and we have a lot of members that are joining us on the live stream. They can probably attest to this. That I think one of my strengths as a trader is my risk management. I very, very, very rarely get hurt. Not to say that I don't make losing trades. I make losing trades, guys. Don't get me wrong. Okay, obviously, I make losing trades, but they're usually very controlled. It's very rare that I get blown up. It's very rare that I get hurt. It might happen. I can count probably on one hand how many times it happens a year. Um, and I'd say it's one of my strengths as a trader is that I rarely get hurt. And it's all about discipline and patience and sticking to my rules and my risk management strategy, which is the tier trading method, which you guys would learn in the advanced courses. You'll learn the tier trading method. Tier trading method is something that I learned at the hedge fund, because you can't enter and exit very large trades in one trade. You can't exit $10 million in one trade. You've got to work your way out of that position and work your way into that position. So that's how I learned it. And then, when I started trading for myself, I just tweaked it to my individual retail trading instead of my professional institutional trading. I tweaked it, and it's worked out very, very well for me over the last, you know, 16 years. So, and that's what I teach all of our members as well is my tier trading strategy, which is designed to do two things specifically. First, it's designed to help keep your losing trades small. Second, it's designed to help you stay in winning trades longer. So that's what the tier trading strategy is meant to do. Daniel wants to know, how long does it take to finish your courses? Daniel, everyone's different. Like, how much time are you going to spend a day going through them? I'd say the average person can finish them. If you really focus on it, you can probably finish them in 1 or 2 weeks. If you really sit down and say, I'm going to go through this material, you can probably finish it in 1 to 2 weeks. Every course has a test and quiz at the end, guys. Everyone has a test and quiz at the end. If you score an 85% or higher, you get a badge for that course. If you get all the badges, you become TTG certified, which is cool. Just kind of lets you know that you've completed the courses, you've passed everything, you've now gotten a professional education, and it lets other people know that you know what you're talking about now. So it's pretty cool. No, Caitlin, you got to control those emotions. Caitlin says, I cry when I have a red day. You got to control those emotions, Caitlin. Trading, losing is part of trading. There is no way around it. You are going to lose money sometimes. There's no way around it. There's no way to stop it. It doesn't matter how good of a trader you become. There's no way for you to never lose money. So I talk a lot about this in the trader psychology course. The trader psychology course, guys, are really designed to help you think robotically. It's designed to help you think statistically instead of emotionally, and remove the emotions from your trading. And, coming to grips with losing as part of trading is step one. You have to understand that going into this game, you're going to make losing trades. And the faster that you can come to accept that, the easier it will be for you to deal with a losing trade and move on to trade the next stock without a care in the world. Okay, you took a loss. That's it. No biggie. You move on. You go to your next stock. But if you take a loss and you harp on it and you get upset about it and you let it drag you down and affect your decision making going forward, you're setting yourself up for failure. So it's very important to understand that trading is losing is part of trading, and there's just no way around it. Justin, I applied right out of college. I applied to 20 or 25 different firms, and I only got a job offer for one of them. I had a finance degree, and I had a lot of economics and accounting understudy courses that I took. I didn't actually minor in them, but I had a lot of courses on my resume about economics and accounting. Nice, Glenn. Good job, Glenn. 8 wins today, 2 small losses. Nice job, Glenn. Keep it up, bud. All right, guys. All right, gang. So I think. Go ahead, Jason.
We thought we were going to go over some trades.
Yeah, which one? What do you want to cover?
I mean, I could talk about Apple. I got blown up on Apple today.
Oh yeah, guys. All right, yeah. So what we can do now, guys, is I could we'll recap some trades today. I traded SONN in the morning. It's a small win. Wasn't really anything to write home about. Jason got blown up, unfortunately, trading Apple. Jason, if you want to just talk real quick about Apple, just kind of let them know kind of what was going through your head and what ended up happening.
Yesterday I was playing puts on Apple. Did it 4 times. 3 out of 4 worked. I had a really tiny stop on the last one. But the first 2 were good for like 50%. The next one was good for like 15%. And then I had like a 7% stop loss on the second one and went into it with just playing with profit and not even that much profit because, you want to leave on a high note. One of the things that I said yesterday was, look, if Apple breaks 270, it's going to cook shorts. And sure enough, it ends up breaking 270. So my thinking was, because we'd seen so many gap ups, like this before, it was going to follow the same pattern and, just kind of go and fill any gaps. So I went with 275 puts, thinking, all right, it's not going to go straight up. It's going to churn. And at least if I get in here now, I'll probably get like a $2 pullback, and then that will be my insurance trade of the day. It just kept going. And it just didn't stop. And, what was really frustrating on the day was the premium burn on the option was just all over the map. Sometimes the stock would drop and the put wasn't moving, which was really weird for Apple. And it was playing like that all day. And then finally, once it was like testing a new high and it broke that, I was just like, all right, I'm out. And this was about 286.30. And, it runs up to 288. The option goes down another 15%, and I'm feeling good about it. And then because of this premium burn, they start backfilling it. And the Apple, where I sold the option, it was all of a sudden 30% higher. So it's just really frustrating. And after that, I was just like, all right, I'm just going to watch the setups for tomorrow. I took a long position in SRF, and just went from there, and just had to kind of retool. But I could have held overnight. Which, look, tomorrow I might feel pretty stupid about selling my position. But if you're in TTG, you also know that I take profit very quickly. And I've had some, like last week I was playing Apple. I took 71% gain, and it ended up going 1,200%. So sticking to that discipline and those rules are what keep you kind of grounded, and gives you don't blow up your account that way. So I'm not going to win every time. When I win, I win, and when I lose, it sucks, but it's part of it. So yeah, it is what it is.
Yeah. Yeah, it's a tough one. Anybody was trying to get short today, would have gotten run over. Markets closed up near highs. It was a gap up that looked like it was going to be shortable, and it just held in there. We held in there all day. Let's talk about SONN real quick. A little trade I made in the morning, guys. Let's talk about this. Now, let's talk about the setup, because I actually tried getting into this stock around 1140, 1130 for 5,000 shares. I never got filled. So SONN, okay, shoots high with a big gap up here. This was my trade. So Jason just walked you guys through Apple. I'm going to talk to you guys about my SONN trade real quick, and then we'll kind of wrap things up. But SONN, you can see We gapped up and then pushed, extended higher. We immediately halted. SON was halted within minutes into the day. We were halted. Okay. Coming out of the halt, we resumed trading, but look what starts to happen. VWAP starts to act as a nice area of support and holds the stock up coming out of that trading halt. And then bang, we pop through the high of the day and halt again. Now I'm thinking to myself, after that trading halt, I'm thinking to myself, okay, I already know VWAP is support. VWAP just showed me support earlier in here, right? This is your initial morning high. Okay. That becomes your initial morning high. There's your support at VWAP. Here comes the trade line working its way underneath. So I said, I want to be a buyer down here in front of VWAP. Okay. So I actually tried to bid myself in here, right here in front of VWAP, and I missed my fill by about 20 cents. Okay. I missed my fill by about 20 cents. I never got in, and the stock ended up shooting all the way back up to 15. It was halted again. But remember what I always say, if the stock's truly strong, you'll get more than one crack at it. So the stock then halted for the third time. That's your third trading halt. 1, 2, 3. 3 trading halts. So now I'm saying to myself, I went ahead, I drew out my Fibonacci retracement levels. Okay. Once we opened up for trading, we pushed higher and then had our pullback. As we pushed higher, I'm saying, guys, I'm looking for 13 to be a buyer. Why am I looking for 13 to be a buyer? Because right here, you can see the 23.6 Fibonacci level lines up with the trade line. And then we had this previous halt price sitting just beneath it at 12.50. So I liked a long on SONN between 12.50 and 13, anywhere in that region. Okay. So on this quick pullback, we pulled right into 13. I jumped in, I got long SON right here, this time for 4,000 shares instead of I was trying to get 5,000 here when I did not get filled. And I got filled at 4,000 shares right here in front of $13. We quickly pushed up towards the high of the day, and I took a piece of profit off the table right there at 1502. And then we failed at the high of the day. This is what I want you guys to notice about this setup. We failed at that high of the day. You see that shooting star top as we tried to break through the high of the day, couldn't, immediately pulled itself right back in. I did not like that failed high. So I sold the bulk of the position right there at 1383. And I held on to 25% of the position in case we squeezed later in the day. And once we broke down below 12, I got flat at 1178. So a small win, nothing really to write home about. I'm long here in front of 13 on that pullback. My first take profit was right here, second take profit, and then I lost on that last piece of the position. But the 2 take profits more than cover that loss on the back end of the trade. And I walked away with a small profit. Okay, so nothing really to write home about. It was not a home run trade by any stretch of the imagination. The stock just died the whole rest of the day. So that was my trade on SONN. That was Jason's trade on Apple. Let me see if we have any couple questions in here. I use mental stops, guys, unless I'm not at my computer. So some of you are talking about mental stops and hard stops. I use mental stops unless I walk away from my computer. Then I'll set a physical stop if I have to walk away for a while. Caitlin, I got to tell you, Caitlin, I absolutely love your drive. Guys, Caitlin is a college student that has been, Caitlin, I see you putting the work in and I see you trading. You were with us in chat today. You had a like $750 day today. And I think last week you were in chat with us on Tuesday. You made like $3,500 or $2,500, something like that, right? But Caitlin's a college student putting the time in and really starting to get herself on track. And I just love, Caitlin, I just love that you're starting this early and you're this passionate that at 10:40 at night, you're on this live stream asking questions, absorbing information. It's tremendous. I love it.
Yeah, I'm jealous of all these college students every time I talk to them.
I know.
Because I wasn't doing this when I was in college. I wish I was. Instead of like asking my parents for money.
Right.
You know, I could have been making my own and learning how to fish.
Exactly. So what else, guys? Anybody else? Anybody have any other questions? I I can't believe how fast time goes, man, when we're doing these live. Jason, it's already, we've been live for 2 hours and 10 minutes already.
Time flies.
Dan, excellent question. With so many indicators on a chart, what's the best to use for intraday and longer periods for a beginner? Dan, get ready to take some notes. I'm going to give you guys the top indicators that I think that you should use. Top indicators that I think you should use. This is going to be a freebie. And then in the courses, you guys will learn how all these indicators work in conjunction with another. How you can use VWAP to end the trade line to identify a setup. How you can use a Fibonacci level plus volume to identify a grade A setup. You guys will learn how all of these things work in conjunction with another. But indicators that you should use. Every single person should use volume. Regular trading volume. Yes, that is an indicator. Yes, it's a single most important indicator. Yes, if somebody held a gun to my head and said, Mike, you can trade the day, but only with one indicator, what would it be? The answer is volume. Understanding volume analysis is extremely important as a trader. If you ignore volume at certain moments during a stock's price action, you're doing yourself a massive injustice, and you're fighting with one hand tied behind your back, and you're trading with your eyes closed. Volume is the single most important. Second, now the rest of them are in no particular order. VWAP with no pre-market data included. VWAP with no pre-market data included. The trade line, which I use the 9 exponential moving average with no pre-market data included. Again, the 9 exponential moving average with no pre-market data included. And Fibonacci retracement levels. If you just want a handful that I think you should use intraday, it's those. Longer term charts, when you're looking at daily charts, weekly charts, monthly charts, 50-day simple moving average, 200-day simple moving average, MACD, RSI, trading volume. Okay? Those are the best indicators that I think you guys should use. All right? What else, guys? Any other questions? Anytime, Dan. It's my pleasure. Guys, when it comes to technical indicators, less is more. What you don't want to do is you don't want your chart to look like this. This is what you guys don't want. Okay, guys, this is what you do not want your charts to look like. Okay? This is what you do not want your chart to look like. Okay? Less is more when it comes to technical analysis. A lot of technical indicators are repeats. They are redundant. A lot of indicators are redundant. Okay? So Bollinger Bands are good. Standard deviation is another really good one. Okay, those are a little bit more advanced. So Dan, you were specifically asking me for a beginner. Okay, so I gave you guys some beginner technical indicators that you guys can use. Okay, but please don't do this. Okay. Less is more when it comes to technical indicators. All right. So like I said, guys, the technical indicators, you will learn that in the advanced courses on the website. Yes, Caitlin, the MACD is a useful indicator. I use the MACD mostly on daily charts. The MACD helps me identify trend changes on the daily chart. Specifically, I like the MACD for my swing trades. I use the MACD a lot for my swing trades. So, like I said, guys, all of these indicators, MACD, RSI, 9 EMA, VWAP, Fibonacci's, all of this you guys learn in the advanced course section of the website that is included for free with your TTD membership. So, again, we'll go over, I'll say it one last time before we finish the stream. Use the coupon code TTGBM2020 at checkout to get a 30% discount on a 1-year all-inclusive membership to TTG and get access to all of my courses, which are the same material that I learned when I worked at a hedge fund, simplified and in course format on the website. The courses are both in text format and also in video format. So if you prefer learning via text or learning via video, we've got both options for you. Okay. Guys, this 30% discount is over after April. Okay. It's over after April. So it's something that we were doing for the coronavirus to help people out during this time. So we are going to, in the month of May, prices are going to go back up to the normal price as the economies open back up and people get back to normal business. So if you guys are interested in joining the family, use coupon code TTGBM2020. If you guys are joining us here on the stream because of the Wolf, Jason Spadafora, you can use his coupon code, which is TTG Wolf. All right. That's really it, guys. You know, the 1 year you get included. I'm sorry. And Jason is also going to be doing, if you sign up for Jason, Jason is going to be doing a 1 hour one-on-one mentor session with you guys that sign up tonight. You sign up tonight only for the Wolf. He's going to include a 1 hour one-on-one mentor session with you guys. Okay. So you're going to get the 1 hour with Jason. You'll get a year of chat room where you see my screen, you hear me on the microphone, you hear Jason on the microphone talking through our trades and what we're seeing during the day. You get a year of text message alerts sent to your cell phone whenever I enter and exit a trade, so you can follow along with what we're trading, even though you're not in chat. Email swing trade alerts, all of the courses, that's beginner and foundation courses, advanced courses, option courses, trader psychology courses, how to survive and thrive during a stock market crash, and also any and all new courses that come out down the road, you guys immediately get access to. Okay, you immediately get access to any and all new courses that come out down the road. All right, there's no upsells. That includes the premium blog, which is updated daily by the moderators in chat with trade ideas, trade recaps, market commentary, general education information, and also the stock profiles and the analyst reports, which I talked to you guys a little bit about earlier, where we compile a profile on any company that you wish, and unlimited. You can do it for 100 companies if you want. We populate for you a PDF stock profile with all their financials, earnings info, news releases, insider buying, all of that stuff, as well as analyst reports where we compile all of the analyst ratings, buy, sell, hold, price targets, so you guys get an idea of what the analyst community thinks about that stock. Okay. All of that is included with your membership for less than a cup of coffee a day. If you guys used to go to Dunkin' Donuts or Starbucks every day, this is actually less. If you went to Starbucks or Dunkin' Donuts every day throughout the year when you were on your way to work or during your lunch break or on your way home from work, whatever it is, a TTG membership with a 30% discount is less than a cup of coffee a day. Take advantage, guys. Show me that you're serious. You know, challenge yourself. Use this downtime to learn a new skill and join TTG, get a professional education, and start implementing professional strategies in the markets. Jason, you had something you were going to say before?
No.
Oh, okay.
I mean, look, the one-on-one with me pays for itself.
Breakout Trading wants to know why no pre-market with my VWAP. Okay, so why do I not include pre-market data in my VWAP? VWAP is a lagging indicator. The more data that gets calculated into VWAP, the less accurate it becomes. Pre-market is a small fraction of the real trading volume of a stock. It's a tiny fraction. When the stock market opens, all market participants are in action. Pre-market, you don't have all the market participants. You have a very small percentage of market participants. And since volume, or VWAP, is a lag indicator, the more data that's calculated in a VWAP, the less effective it becomes. That's why you don't use VWAP over an extended period of time. VWAP is an intraday indicator. If you use VWAP from 15 days ago, you're going to eventually have a flat line. Okay, it becomes less accurate the more data that gets factored into the equation for VWAP. So if you're including that pre-market data, not only are you including data that will affect the accuracy of the VWAP moving forward, but you're including data based on a fraction of the true data. The true data being 100% of market participants once the bell opens. I want data based on 100% market participation, not 5% market participation, 1% market participation. I want data on 100% market participation. And that's why I do not include pre-market data on my VWAP indicator. I do not include pre-market data on my trade line, which is my 9 EMA. Same thing, lagging indicator. Okay, if you include pre-market data, your VWAP and your 9 EMA will be different from mine. All right, guys. Whew. Another successful stream in the books. Yes, Tito, yes, an ETF price action will move based on the underlying stocks that the ETF holds. And then some ETFs are leveraged, so you'll get 2 times or 3 times the move. Hey guys, there's a lot of people that are asking questions right now, like very general, very basic questions. Guys, there are, you know, you guys you really have to take advantage of this discount. There's a lot of people that are asking very beginner questions, which is great. I encourage you guys to ask questions. The only way you're going to learn. There's no such thing as a stupid question. Believe me, yes, I've been doing this for 16 years now, but there was once a day one for me. I asked all these same questions that you're asking. Take advantage of this discount, get the 30% off, and start with the beginner and foundation courses. The beginner and foundation courses start you from scratch, from a little baby, okay, that has never taken a step before. It walks you through the very, very basics of trading, setting up your account, how to place a trade, the difference between the different types of trades, basic charting patterns, how to choose what broker is right for you. You know, very, very basic vocabulary and definitions. Very basic material, guys, is where the beginner and foundation course starts. Okay. So if you are brand new to this, you've never placed a trade a day in your life, you can start with the beginner and foundation courses. We have members in True Trading Group that have never traded a stock a day in their life until they join TTG. And then we have traders that have been trading for 20 years. Okay. We actually just got a member yesterday that is 82 years old, and he has been trading stocks for 55 years. Okay. He is 82 years old. So what is your excuse? He's 82 years old and he's still trading stocks. I told him he's my idol. I said, that is going to be me. I'm going to be 82 years old pressing keys on my keyboard. I might not be as fast on the keyboard as I am now, but bet your ass I'm going to be pressing keys when I'm 82 years old. I love hot sauce, Kelly. I love hot sauce. I don't know how you knew that. I love spicy food. Every time I order buffalo wings, I always say make them as hot as you can. All right, guys? Okay, gang. So that's it, guys. That concludes our live stream. We're now pushing 2.5 hours. I enjoyed every minute of it with you guys, as we always do. For those of you that have not done so already, smash that like button for me on this video, subscribe to the channel, hit that notification bell so you don't miss any more of these videos. And for the love of God, sign up with the coupon code TTGBM2020 and get a 30% discount and get the professional education that you need. I am here and willing to give you the mentorship and guidance. Any member that is on this live stream can attest to the detail and the time and energy that I put into each and every single one of our members. I do one-on-ones every single day. I truly give a damn about whether you succeed or fail. I take my title as mentor very, very seriously. Okay? If you guys are serious about doing this, I'm serious about helping you. You have the ability during the day to send me private messages to ask me questions in the middle of the trading day. I'm on the microphone. I'm telling you exactly what I'm seeing, what I'm doing. I'm sharing my screen. You're seeing exactly what I'm looking at. You're seeing exactly what I'm doing. We have a lot of members that get into trades even before I do, because I tell them, guys, I like ABCD. I'm a buyer if we pull back to 1250. I tell them that. The stock pulls back in, somebody gets long at 1255, I get long at 1275. And they got in the trade before I did. Okay, it happens all the time because I always tell people what I'm doing. Nice, Jerry. Jerry says he made his subscription back 2 days after signing up. Hell yeah, Jerry. Hell yeah. I love it. I love it, Jerry. That's great stuff, man. All right, guys. So that's it, gang. Take advantage, guys. The 30% discount, TTG BM 2020. And anybody that signs up tonight for the Wolf gets a one-on-one mentor session with the Wolf, which honestly, guys, just that in itself is worth the membership. You know, just that in itself is worth the membership. Never mind all of the courses. Guys, you have to realize you're paying less than a cup of coffee a day for the education I received at a hedge fund on Wall Street. Think about that for 1 second. The courses are the same material I learned at a hedge fund in New York City. And for less than a cup of coffee a day, you can get that information. In addition, get all of my trade alerts. In addition, get one-on-one mentorship, ask questions, get homework, and get guidance. All of that for less than a cup of coffee a day. If you are serious about doing this, there's never been a better time to take advantage because this 30% discount's over at the end of April. Okay? So if you're ready to do this, I'm ready to help you. Take care, guys. Have a great night. TTGBM 2020. Do not forget that discount code. It expires in 2 weeks. I will see my usual fam in chat tomorrow. For all of our YouTube community that's not yet a TTG member, I hope you guys join the family, and I hope to see you also in chat tomorrow. Take care, guys. Everyone have a fantastic night. I'll see you guys all later. Have a good one.